Question 1. Scenario question. Mr. Thomas is a self-employed graphic designer who recently applied for long-term disability insurance. His agent told him that the insurer would require medical records, a list of occupations, and documentation of his income for underwriting purposes. Mr. Thomas is concerned about how his income would affect his policy. Which of the following factors should Mr. Thomas expect to be considered most heavily in determining his disability insurance premium? His level of education and work experience. B. The income level he has reported on his tax returns. C. The duration of his medical history. Answer. B. Explanation. In disability insurance underwriting, income is a critical factor in determining the benefit amount, as the insurer typically pays a percentage of the policyholder's income, usually 6080% in the event of a disability. For self-employed individuals like Mr. Thomas, income documentation such as tax returns is often used to assess the income level and establish the corresponding premium and benefit amount. The other factors, A, C, D, may influence underwriting, but income documentation is the most relevant in this case. Question 2. Which of the following exclusions would likely be found in a typical disability insurance policy? A. Injury from a motor vehicle accident caused by an uninsured driver. B. Disability resulting from drug or alcohol abuse. C. Disability caused by a pre-existing condition after 2 years of coverage. D. Injury from an accident while participating in a non-profit charity event. Answer. B. Explanation. Most disability insurance policies exclude coverage for disabilities caused by drug or alcohol abuse, as it is considered a preventable cause of disability. Insurance companies typically classify such disabilities as avoidable risks, which are not covered by the policy. On the other hand, accidents and D and certain pre-existing conditions C might be covered under specific conditions, especially if the insured has had continuous coverage for an extended period or if certain riders are included. Therefore, B is the most common exclusion. Question 3. Which of the following is true regarding the benefit period of a long-term disability insurance policy? A. The benefit period always ends after 1 year. B. The benefit period may be extended if the insured is still unable to work due to the same disability. C. The benefit period is typically set to a fixed number of years, regardless of the severity of the disability. D. The benefit period is the same as the elimination period for long-term disability policies. Answer. B. Explanation. The benefit period of a long-term disability insurance policy is the length of time the insured will receive benefits after the elimination period, waiting period. In many cases, the benefit period can be extended indefinitely if the disability continues, although this depends on the terms of the policy. Common long-term disability policies have benefit periods ranging from 2 years to age 65, or even lifetime in some cases. The elimination period, which is the waiting period before benefits are paid, is separate from the benefit period and is generally shorter. Option B is correct because many long-term disability policies provide for an extended benefit period as long as the disability persists. Question 4. Which of the following is a key difference between short-term disability and long-term disability insurance? A. Short-term disability insurance generally has a longer waiting period than long-term disability insurance. B. Short-term disability insurance typically provides a higher percentage of the policyholder's income than long-term disability insurance. C. Long-term disability insurance benefits are generally paid for a longer duration than short-term disability insurance. D. Short-term disability insurance usually covers a wider range of disabilities than long-term disability insurance. Answer. C. Explanation. The primary difference between short-term and long-term disability insurance is the duration of the benefit period. Short-term disability typically covers a shorter duration, usually a few weeks to 6 months, while long-term disability insurance can provide benefits for a much longer period, often extending to several years or even until the policyholder reaches retirement age. Short-term disability insurance usually has a shorter waiting period but provides a smaller percentage of the income compared to long-term disability insurance. Question 5. Which of the following would most likely be covered under long-term disability insurance policy? A temporary back injury that prevents the policyholder from working for 2 weeks. B. A chronic illness such as multiple sclerosis, which gradually impairs the policyholder's ability to work. C. A self-inflicted injury sustained during a suicide attempt. D. A disability caused by excessive alcohol consumption. Answer. B. Explanation. Chronic illnesses like multiple sclerosis, which cause long-term impairment and affect the ability to work, are typically covered under long-term disability insurance. These conditions often lead to partial or total disability over time, and long-term disability policies are designed to support individuals who face prolonged health challenges. In contrast, temporary injuries, A, self-inflicted injuries, C, and alcohol-related disabilities, D, are generally excluded from coverage under most policies. Question 6. In Kentucky, what is the impact of the state's workers' compensation laws on disability insurance policies? A. Workers' compensation benefits automatically reduce the amount of long-term disability insurance benefits a policyholder can receive. B. Kentucky state law prohibits employers from offering both workers' compensation and disability insurance to the same employee. C. Disability insurance benefits are paid by the state government and are not affected by workers' compensation claims. D. Workers' compensation benefits can only be used to supplement long-term disability insurance, but not to reduce the amount received. Answer A. Explanation. In Kentucky, as in most states, workers' compensation benefits are intended to cover work-related injuries and are typically coordinated with disability insurance. If an individual receives workers' compensation benefits, those benefits often reduce the amount of long-term disability benefits they can collect. This ensures that the individual does not receive more than 100% of their pre-disability income through the combination of both workers' compensation and disability insurance. Option A correctly reflects this coordination of benefits, while the other options do not align with typical state regulations. Question 7. Which of the following is true about a residual disability benefit in a disability insurance policy? A. It is available only if the policyholder is unable to perform any occupation at all. B. It provides a partial benefit if the policyholder can still work but with reduced capacity or income. C. It applies only to individuals who are working in high-risk occupations. D. It provides a fixed monthly benefit regardless of the policyholder's income loss. Answer B. Explanation. A residual disability benefit is designed to provide partial benefits to individuals who are still able to work but are earning less income due to a disability. This benefit helps to cover the income lost as a result of the reduced ability to perform their job duties. The amount of the benefit is typically proportional to the income loss. This is different from total disability, where the insured is unable to work at all. Option B accurately describes the residual disability benefit. Question 8. Which of the following is a typical feature of a non-cancelable disability insurance policy? A. The insurer has the right to adjust the premium rates during the life of the policy. B. The policyholder can cancel the policy at any time for a full refund of premiums. C. The insurer is prohibited from cancelling the policy or increasing premiums as long as premiums are paid. D. The policy provides benefits only for the first year of disability. Answer C. Explanation. A non-cancelable disability insurance policy is one where the insurer is prohibited from cancelling the policy or increasing the premiums as long as the policyholder continues to pay the premiums. This provides stability and predictability for the policyholder, ensuring that their coverage remains in force and the premiums remain unchanged regardless of changes in their health or occupation. The other options are incorrect as they do not align with the characteristics of non-cancelable policies. Question 9. Which of the following best describes the coordination between disability insurance and Social Security disability insurance (SSDI)? SSDI benefits are considered income and will be deducted from the disability insurance payout. B. Disability insurance benefits automatically supplement SSDI benefits to ensure the insured receives 100% of their pre-disability income. C. Disability insurance benefits are unaffected by SSDI and they are paid in addition to SSDI benefits. D. SSDI benefits are not affected by disability insurance benefits and the insured must choose which benefit to claim. Answer A. Explanation. Disability insurance policies often coordinate with Social Security disability insurance (SSEI) to prevent overpayment to the insured. If the insured is receiving SSDI, the disability insurance benefit may be reduced to account for the SSDI payments, ensuring that the total amount received does not exceed a certain percentage of the pre-disability income. This coordination of benefits is designed to avoid duplication and ensure fair compensation. Option A correctly describes how SSDI benefits are integrated with disability insurance. Question 10. What is the primary purpose of a cost of living adjustment COLA rider in a disability insurance policy? A. To adjust the premium amount over time based on the policyholder's age. B. To increase the benefit amount to keep pace with inflation. C. To provide additional benefits for policyholders with chronic illnesses. D. To allow the policyholder to purchase additional coverage at a low cost in the future. Answer. B. Explanation. A cost of living adjustment COLA rider is designed to increase the benefit amount over time to keep up with inflation. This ensures that the policyholder's disability benefits maintain their purchasing power and are not eroded by rising living costs. This rider is particularly important for long-term disability policies, as the insured may be receiving benefits for many years. Option B correctly identifies the purpose of a COLA rider, while the other options are unrelated to its intended use. Question 11. Which of the following is a key characteristic of group disability insurance compared to individual disability insurance? A. Group disability insurance offers higher benefit amounts than individual policies. B. Group disability insurance typically has a shorter waiting period than individual policies. C. Group disability insurance is usually provided by employers and does not require individual underwriting. D. Group disability insurance provides coverage for pre-existing conditions from the start of the policy. Answer. C. Explanation. Group disability insurance is usually provided by employers and covers multiple employees under one policy, which does not require individual underwriting. This is in contrast to individual disability policies where each person is assessed for their personal risk factors, e.g., occupation medical history. Group policies may offer more affordable premiums, but typically have lower benefit amounts and less flexibility than individual policies. Pre-existing conditions, D, are often excluded from coverage under both group and individual policies during the initial coverage period. Question 12. Mr. Thompson is a policyholder under a long-term disability insurance plan. After a back injury, he is able to return to work, but he now earns 60% of his pre-disability income due to the limitations caused by the injury. What type of benefit would Mr. Thompson likely qualify for under his policy? A. Total disability benefits. B. Residual disability benefits. C. Short-term disability benefits. D. Rehabilitation benefits. Answer. B. Explanation. Residual disability benefits are designed to provide partial benefits when a policyholder can return to work but is earning less due to a disability. In Mr. Thompson's case, his reduced income, 60% of pre-disability earnings due to the limitations of his injury, qualifies him for residual disability benefits, which compensate for the income loss. Total disability benefits are generally only applicable if the insured cannot work at all. Short-term disability benefits, C, typically cover a short duration, and rehabilitation benefits, D, focus on returning to work, but they do not compensate for ongoing income loss. Question 13. Which of the following best describes the elimination period of ECA disability insurance policy? A. It is the period during which the insured must be continuously disabled before they are eligible for benefits. B. It is the waiting period before a disability insurance policy can be cancelled by the insurer. C. It refers to the maximum period during which benefits are paid under the policy. D. It is the time required for the insured to appeal a denied claim. Answer. Explanation. The elimination period is the period of time the insured must wait after the disability occurs before they are eligible to begin receiving benefits. It functions similarly to a deductible in health insurance, where benefits are delayed until the elimination period has been satisfied. This period can vary from a few weeks to several months. The other options refer to different aspects of the policy and are not correct. Question 14. Which of the following is typically an exclusion under most disability insurance policies? A. Disabilities resulting from work-related injuries covered by workers' compensation. B. Disabilities caused by natural disasters such as earthquakes. C. Disabilities from mental health conditions if the condition is documented and treated. D. Disabilities caused by illnesses that were pre-existing at the time the policy was purchased. Answer. D. Explanation. Most disability insurance policies exclude coverage for disabilities resulting from pre-existing conditions during an initial waiting period, or they may require a higher premium for coverage of these conditions. This is to protect insurers from adverse selection, where only individuals with health risks purchase insurance. Work-related injuries are typically covered under workers' compensation, while mental health conditions, C, are often covered if they meet specific criteria. Natural disaster-related disabilities, B, are usually not excluded unless stated in the policy. Question 15. Which of the following best describes the waiver of premium rider in a disability insurance policy? A. Allows the policyholder to waive the premium payments if they are temporarily unemployed. B. It allows the insurer to waive the policyholder's premiums if they become disabled and are unable to pay. C. It reduces the amount of premium for policyholders who are unemployed for a certain period. D. It permits the policyholder to add additional coverage without paying the extra premium. Answer: B. Explanation: the waiver of premium rider allows the policyholder to stop paying premiums if they become disabled and are unable to work. This rider ensures that the policy remains active without the policyholder having to worry about premium payments during their period of disability. It is an important feature in disability insurance policies as it ensures that the insured maintains their coverage even when they are unable to earn an income. Question 16. Which of the following is a typical benefit of a future purchase option rider in a disability insurance policy? A. It provides the insured with a lower premium rate when they become older. B. It allows the insured to increase their coverage in the future without additional medical underwriting. C. It gives the insured the option to purchase additional coverage for family members. D. It allows the policyholder to reduce the waiting period for benefits. Answer: B. Explanation: a future purchase option rider allows the policyholder to increase their coverage in the future without the need for additional medical underwriting. This is especially beneficial if the policyholder's health worsens over time, as it guarantees the ability to increase coverage without facing higher premiums due to changes in their health status. This rider does not typically affect the premium rate, A, or family coverage, C, and does not influence the waiting period for benefits, D. Question 17. In Kentucky, which of the following is true about the coordination of benefits between private disability insurance and Social Security disability insurance (SSDI)? SSDI benefits are paid first, and private disability insurance benefits are reduced by the amount of SSDI received. B. Private disability insurance benefits are paid first, and SSDI benefits are reduced by the amount of private insurance benefits. C. Both SSDI and private disability benefits are paid simultaneously without any reduction. D. SSDI benefits are only available after private disability insurance benefits have been exhausted. Answer: A. Explanation: in Kentucky, as in many states, private disability insurance benefits are often coordinated with SSDI benefits. Typically, SSDI benefits are paid first, and the amount of private disability insurance benefits may be reduced by the amount of SSDI received. This is to avoid the policyholder receiving more than 100% of their pre-disability income. This coordination ensures that the benefits from both sources do not exceed the individual's previous earnings. Question 18. Which of the following is a typical feature of non-cancelable disability insurance policies? A. The insurer can increase the premiums as the policyholder ages. B. The insurer cannot cancel the policy or change the premiums after it has been issued. C. The policyholder must prove continued need for coverage every year. D. The policyholder can cancel the policy at any time for a full refund of premiums. Answer: B. Explanation: a non-cancelable disability insurance policy ensures that the insurer cannot cancel the policy or change the premiums after it has been issued as long as the policyholder continues to pay the premiums. This provides stability and security to the policyholder as they are guaranteed coverage without changes to their premium rates. In contrast, cancelable policies may allow the insurer to alter terms or cancel the coverage. Question 19. Which of the following best describes the purpose of a cost of living adjustment (COLA) rider in a disability insurance policy? A. To increase the benefit amount based on the policyholder's income at the time of the disability. B. To adjust the benefit amount each year to keep pace with inflation. C. To increase the policyholder's premiums as inflation rises. D. To allow the policyholder to purchase additional coverage as their income increases. Answer: B. Explanation: the cost of living adjustment (COLA) rider adjusts the disability insurance benefit amount to keep pace with inflation, ensuring that the policyholder's benefits retain their purchasing power over time. This rider is particularly valuable for long-term disability policies where the insured may be receiving benefits for an extended period. It does not increase premiums, C, or adjust based on income, A, and it does not offer the ability to purchase additional coverage, D. Question 20. Which of the following is an example of a partial disability under most disability insurance policies? A. The policyholder cannot work at all due to a serious illness. B. The The policyholder is unable to perform their usual occupation but can work in a different capacity. C. The policyholder can perform their regular job duties but experiences some discomfort. D. The policyholder suffers an injury that requires hospitalization but does not affect their ability to work. Answer B. Explanation. Partial disability typically refers to a situation where the policyholder is unable to perform their usual occupation in full but can work in a different capacity or perform their job duties with limitations. Partial disability benefits provide compensation for the income loss resulting from reduced work capacity. Total disability A refers to the inability to work at all. Option C may indicate a less severe condition that does not qualify for benefits, and option D is unlikely to qualify unless it causes substantial income loss. Question 21. Which of the following would NOT be considered a type of disability insurance coverage? A. Short-term disability insurance. B. Long-term disability insurance. C. Accidental death and dismemberment (ADI) insurance. D. Disability income insurance. Answer C. Explanation. Accidental death and dismemberment (ADI) insurance provides a benefit if the insured dies or is severely injured due to an accident but does not cover income loss due to disability. Short-term A and long-term disability B insurance are specifically designed to provide income replacement for individuals who are unable to work due to injury or illness. Disability income insurance D also falls into this category. Question 22. In disability insurance, the period of benefits is defined as A. The time between the onset of disability and the receipt of benefits. B. The total length of time during which benefits will be paid to the insured. C. The amount of time it takes to process a disability claim. D. The period during which the policyholder is not required to pay premiums after becoming disabled. Answer B. Explanation. The period of benefits is the length of time during which the insured is eligible to receive disability benefits. This can vary depending on the policy, with some providing benefits for a limited time, e.g. 2 years, and others offering benefits until retirement age or for life. Option A refers to the waiting or elimination period, while C and D describe unrelated concepts. Question 23. Which of the following could be a reason for the denial of a disability insurance claim? A. The disability was due to a pre-existing condition. B. The insured is receiving treatment for a non-work-related injury. C. The insured has not been unable to perform any work. D. The insured is still receiving a salary from their employer. Answer A. Explanation. Disability insurance policies often exclude coverage for disabilities resulting from pre-existing conditions, especially during the first few months or years of coverage. Option B, C, and D do not automatically disqualify the claim, though. A policy may have specific exclusions for work-related injuries or requirements that the insured be unable to perform their regular duties. Question 24. Which of the following best describes own occupation disability coverage? A. Coverage that pays benefits only if the insured is unable to perform any type of work. B. Coverage that pays benefits if the insured is unable to perform their specific occupation. C. Coverage that pays benefits regardless of whether the insured works or not. D. Coverage that requires the insured to return to work in a modified capacity before benefits are paid. Correct answer B. Explanation. Own occupation coverage provides benefits if the insured is unable to perform the duties of their specific occupation, even if they are able to work in a different occupation. This type of policy is typically more beneficial for highly specialized professionals. Any occupation coverage, they pays benefits only if the insured is unable to work in any occupation. Question 25. A residual disability rider in a disability policy typically pays benefits to an insured who they cannot perform any work due to a disability. B. Suffers a partial loss of income due to disability. C. Has been disabled for a specific number of years. D. Is unable to work for a specified period of time. Answer B. Explanation. A residual disability rider provides benefits when the insured suffers a partial loss of income due to disability, such as being able to return to work in a limited capacity or earning less than their pre-disability income. It helps offset the reduction in income, unlike total disability benefits, which are paid when the insured cannot work at all. Question 26. Which of the following is true regarding the benefit amount for disability insurance? A. Disability benefits are usually paid as a lump sum. B. Benefits are typically based on the insured's pre-disability income. C. Benefits are fixed and do not adjust for inflation. D. Benefits are not subject to any limitations based on income. Answer. B. Explanation. Disability benefits are generally calculated based on the insured's pre-disability income, usually as a percentage of their earnings. This ensures that the benefits are proportionate to what the insured was earning before the disability occurred. Benefits are typically not paid as a lump sum, and many policies offer cost of living adjustments to account for inflation. C. Income limitations may apply depending on the policy. Question 27. Which of the following is a characteristic of a taxable disability insurance policy? A. Benefits are not subject to income tax if paid to the insured. B. Benefits are subject to income tax because the employer pays the premiums. C. Benefits are paid tax-free regardless of how long the insured is disabled. D. Benefits are taxed at a reduced rate after a set period of time. Answer. B. Explanation. If the employer pays the premiums for a disability insurance policy, the benefits are considered taxable income. In contrast, if the policyholder pays the premiums, the benefits are typically not taxed. This is an important factor to consider when evaluating disability policies, as it can impact the net benefit received. Question 20. What is the purpose of a guaranteed renewal clause in a disability insurance policy? A. It guarantees the policyholder the ability to purchase additional coverage without underwriting. B. It guarantees the renewal of the policy regardless of changes in the insured's health. C. It allows the insurer to increase premiums at each policy renewal. D. It ensures that the policyholder will not lose coverage even if they retire early. Answer. B. Explanation. A guaranteed renewal clause ensures that the policyholder can renew their disability insurance policy each year even if their health changes without being subject to additional underwriting or denial of coverage. This clause provides peace of mind to policyholders that their coverage will remain in force as long as they continue to pay premiums. Question 29. What does a waiting period in a disability insurance policy refer to? A. The length of time the insured must wait for their claim to be processed. B. The period between when the policyholder purchases the policy and when it becomes effective. C. The amount of time that must pass after a disability begins before benefits are paid. D. The period during which the insurer will not pay benefits for any claim. Answer. C. Explanation. The waiting period, also known as the elimination period, refers to the time the insured must wait after becoming disabled before they begin receiving benefits. This period is set to prevent claims for minor or short-term illnesses and injuries. The longer the waiting period, the lower the premiums tend to be. Question 30. Which of the following is a typical exclusion in most disability insurance policies? A. Disability due to accidental injury at work. B. Disability caused by self-inflicted injuries. C. Disability resulting from a car accident. D. Disability resulting from an illness that occurred after the policy was purchased. Answer. B. Explanation. Most disability insurance policies exclude coverage for injuries that are self-inflicted, whether intentionally or unintentionally. This is because self-inflicted injuries are considered preventable and outside the scope of most insurance coverage. Disabilities caused by work-related accidents, say car accidents. C. An illness is contracted after the policy is in effect. D. Are typically covered under disability insurance, though exclusions may vary by policy.